Welcome, listeners, to Aither Insights. If you're joining us for the first time, we're here to help you navigate the complexities of environmental commodity markets.
That's right. We provide the analysis you need on key regulations and market trends. Clear, actionable understanding.
And today, we're tackling a really big one, the EU Emissions Trading System 2. You'll hear it called ETS2. This isn't just another policy tweak, or a slight adjustment to the existing framework.
No, definitely not.
It's a fundamental and pretty far-reaching change in how carbon is priced across entire new sectors. It's set to directly impact the operational fabric of, well, countless businesses.
Absolutely.
So we're here to unpack what it truly means, who it specifically affects, and critically, why your compliance journey for ETS2 needs to begin right now, not later.
Yeah, and we'll also delve into the intricate mechanisms at play, the market dynamics you absolutely need to grasp, and also precisely how Aither Group serves as your strategic partner, really helping transform this complex transition into a seamless, optimized part of your business operation.
What exactly is ETS2? Why is it such a big deal compared to, say, the original ETS?
Well, its roots are in the European Green Deal. It's a core part, really. The main idea is to take carbon pricing, which used to focus mostly on heavy industry and power plants.
The big emitters we usually think of.
Right. And extend it. Bring it to new sectors specifically, road transport and buildings.
So the fuel you put in your car, the gas or oil that heats your home?
Exactly. The fossil fuels used there. ETS2 assigns a direct financial cost to the carbon emissions from those fuels. It's about making that hidden environmental cost visible.
And when does all this start? I know there's been some discussion about the timing.
Good question. The official start date is slated for 2027.
Okay.
But, and this is important, there's a built-in price stability mechanism. Think of it like a safety valve.
To prevent price shocks.
Precisely. If the average carbon allowance price gets too high, the trigger is exceeding €45 per ton of CO2 over a specific period before the start.
Then what happens?
Then the whole system launch could be delayed by a year to 2028.
Ah, okay. So that adds a bit of uncertainty for planning then.
It definitely does. It's a kind of wait-and-see element baked into the system design. Good for stability, maybe, but tricky for businesses trying to budget.
So who's actually on the hook for this? Who has to buy these carbon allowances? Is it me when I fill up my car?
No, not directly. The way it's set up, the regulated entities are the fuel suppliers, the distributors.
The companies selling the petrol, the diesel, the heating oil.
Exactly. They're the ones who will have to buy and then surrender these ETS2 allowances for the fuel they sell. It's their direct compliance obligation.
But the cost doesn't just stop there, presumably.
No, absolutely not. The clear expectation, really the design, is that these costs will be passed down the supply chain.
So ultimately, it lands with the end users, households, businesses buying fuel.
That's the mechanism. It makes the carbon cost part of the price everyone pays. It's designed as an upstream system. It means it targets the fuel suppliers directly, not the millions of individual consumers or drivers or homeowners.
Ah, okay. So the obligation sits higher up the chain.
Precisely. And it's designed to work in harmony with the Social Climate Fund, which is meant to, help support vulnerable households and businesses during this transition.
So what does this upstream design fundamentally mean for businesses on the ground then? Who feels the direct impact?
Well, the impacted sectors are clear and pretty critical. This includes gas suppliers, companies within the building sector supply chain, entities involved in road transport fuel, and smaller-scale industrial operations not covered by ETSI.
Okay.
And if you're a fuel supplier or importer, you really need to listen closely here.
Why is that?
Because you are specifically designated as the excise duty point holder.
Excise duty point holder. Sounds official.
It is. It isn't just a legal label. It fundamentally shifts the operational burden. It makes your business the legally mandated compliance entity under EU ETS2.
So the buck stops there, essentially.
Exactly. The direct responsibility is squarely on your shoulders, demanding new levels of accountability, monitoring, reporting.
Okay, this isn't some distant policy then, something to just, keep an eye on for the future.
Absolutely not. Beginning in 2027, this new fuel-based cap and trade system directly impacts your operational reality. Your business will find itself under the direct oversight of the EU Commission.
And crucially, while the compliance burden, the initial cost of buying and surrendering allowances falls on those suppliers,
Yes.
the final costs are explicitly expected to be passed through to consumers. Is that right?
That's the design, yes.
Which brings us to the impact on individuals. This is probably where many listeners are thinking, okay, how does this affect me?
Yeah, and the number one concern, understandably, is the direct hit to household budgets.
Higher heating bills, more expensive fuel.
That's the expectation. And this immediately raises questions about fairness. Is it regressive?
Meaning it hits lower income households harder?
Potentially, yes,
Hmm.
because energy costs make up a bigger slice of their overall budget.
Right.
And what's interesting, or maybe worrying, is that public awareness about ETS2 itself, and especially about the measures meant to help with these costs, seems quite low still.
Okay, so there are support measures. What's in place to help manage these costs, especially for vulnerable households?
Yes, there is. This brings us to something called the Social Carbon Fund.
Okay.
Its whole purpose is to cushion that blow, specifically for vulnerable households and also for microenterprises, to mitigate that regressive impact we just talked about.
Okay, let's shift gears slightly. What about businesses? They're obviously facing changes too, which could affect their competitiveness.
Definitely. Especially if they compete internationally or are in really price-sensitive markets. There are also worries about supply chain disruptions as these costs ripple through.
And the admin burden, compliance, reporting.
Yes, particularly for smaller businesses, SMEs, that can be a real headache. And like we mentioned, that carbon price volatility adds another layer of planning uncertainty.
But you mentioned upsides, opportunities.
Yes, because ETS2 isn't just a cost. It's a very strong market signal. It's accelerating that shift to a low-carbon economy.
How does that create opportunity?
Well, it creates risks, for sure, like stranded assets. Think about older, inefficient buildings or vehicles. Their value could drop significantly.
Because they'll cost more to run under ETS2.
Precisely. But the flip side is the potential for green premiums.
Meaning efficient assets become more valuable.
Exactly. An energy-efficient building, an EV fleet. These become more attractive, potentially commanding higher prices or rents because they save money in this new carbon-constrained world. It's a real driver for strategic change.
Let's get specific. What about, say, fuel suppliers? They're right at the center of this.
For them, it's very direct. They need to manage that carbon price volatility we talked about, maybe through hedging or other financial tools.
Okay.
They need to figure out how to pass those costs through smoothly to customers without causing major disruptions or losing market share. And they need to adapt all their internal systems accounting, reporting for these new allowance obligations. It's a big operational lift.
And what about logistics? Trucking companies, delivery services, they use a lot of fuel.
They're not directly regulated like the fuel suppliers, but boy, are they exposed to those pass-through costs.
So higher fuel bills for their fleets.
Big time, which likely means higher freight rates for everyone who ships goods. They're also looking at huge capital investments needed to modernize their fleets. Moving to electric, maybe hydrogen trucks.
Which depends on infrastructure being ready, right? Charging stations, hydrogen refueling.
Absolutely. That's a major concern. Is the infrastructure going to be there when they need it and where they need it? Plus, maintaining competitiveness, especially for cross-border routes where rules or costs might differ slightly.
It sounds like it forces a whole new way of thinking for them.
It really does. It shifts the calculation from just cost per kilometer based on fuel price to a total cost of ownership, where the carbon intensity of the fuel becomes a massive factor.
Driving that switch to EVs and hydrogen much faster.
That's the clear economic incentive ETS2 provides. We're already seeing logistics firms pilot these technologies much more seriously now.
And you mentioned property owners briefly.
Yeah, just quickly, real estate investors, property owners, they're also thinking about this. How does ETS2 affect property values? What about the cost of renovations needed for energy efficiency? And if you're a landlord, how do you share increased heating costs with tenants? It ripples out.
It really touches almost everything. That brings us to a really critical question. When does the compliance journey for EU ETS2 truly begin? Is it 2027 when trading starts?
No. And this is key. The answer is unequivocal, and it bears repeating.
No.
It begins now.
No. Okay.
Missing these crucial upfront deadlines risks not just penalties, but non-compliance from day one. That can have significant, costly repercussions for your operations, your reputation.
So it's about being proactive, not reactive. The system demands it.
Precisely. Planning for a 2025 start is definitely the safest, most prudent approach. Don't bank on a delay. Regulated entities have to submit their first report of historical emissions data. And then, a year later, April 30, 2026, the first verified report on emissions for the actual reporting year 2025 is due.
Verified. So auditors get involved.
Correct. This leads up to January 1st, 2027. That's when allowance trading officially begins.
That's when the market really kicks into gear.
That's when the financial implications become very, very real.
And you mentioned earlier those costs are expected to pass through to consumers. That's going to face scrutiny, surely.
Oh, absolutely. There will inevitably be significant scrutiny on the transparency of these carbon costs. It's built into the system.
Oh, so.
From 2028, each regulated entity, remember, the fuel suppliers will be legally required to report the average share of costs related to surrendering allowances that it passed on to its consumers for the preceding year.
Wow. Okay, so direct reporting on cost pass-through, that is transparent.
It is. And it's a big deal for public accountability, market perception. It could definitely influence consumer choices and, brand reputation down the line.
And this pass-through mechanism, it's designed to do more than just cover costs, right?
Yes, it's designed to profoundly prompt market participants, everyone along the chain, ultimately to factor these new transparent carbon costs into strategic decisions.
Like investments.
Exactly. Investing in energy efficiency upgrades, accelerating the adoption of decarbonized road transport technologies. It's meant to drive real, tangible change in investment patterns.
Okay, let's dive into the allowances themselves. They're the currency of this system. What exactly are they?
Sure. These allowances, often called EUAs under the existing system, but specific to ETS2 here, represent the right to emit 1 metric ton of CO2 under this specific EU ETS2 system.
And where do they come from?
They are issued, allocated, or sold via auction by the European Commission.
Okay. And it's crucial to understand they are not carbon credits, right? There's often confusion there.
That's a really important distinction, yeah. They do not represent the reduction or removal of any emissions. They don't make anyone carbon neutral in the way retiring a carbon credit from, say, a voluntary offset project does.
So these are purely compliance instruments within this regulated market.
Correct. Just for meeting your obligations under ETS2.
So for ETS2, how is the supply and price determined? Is it like ETS1?
Similar principles, but a separate system. A fixed supply cap was initially set back in 2024, defining the overall limit. From there, the market interaction of supply and demand will determine the price.
And the price signals the cost of compliance.
And, crucially, drives investment towards cleaner alternatives. The challenge is that the best low-carbon solutions, heat pumps, EVs, sustainable biofuels, aren't uniformly available or cost-effective everywhere yet, and the infrastructure isn't fully built out.
But the price signal helps drive that.
Exactly. It creates that strong economic push for innovation, for scaling up production, and for building the infrastructure. It fosters new markets for green tech. Early movers can definitely benefit. ETS2 is designed to change behavior, investment flows, tech choices, even consumer habits. Carbon efficiency is becoming a core measure of performance.
Now, new markets can be volatile. Is there anything built in to manage that?
Yes, and this is quite interesting. ETS2 includes several pretty robust price-based intervention mechanisms.
Beyond these internal system rules, what else influences the price?
Oh, lots of broader macro factors, things like industrial production trends, global economic growth perspectives. They play a huge role.
Makes sense. More activity, more fuel use, more demand for allowances.
Exactly. And similarly, the prices of other commodities are important, especially other fossil fuels, and what we call fuel switching costs. How expensive or difficult is it to switch from, say, gas to something else?
Right, the relative costs matter.
And lastly, don't underestimate legislative and political developments, things that fuel trust or maybe distrust in the long-term stability and direction of the system. That really shapes market sentiment and prices. It's a truly multifaceted puzzle.
It certainly sounds like it. Navigating these new complex regulations and the dynamic market they create, it can feel overwhelming, especially with the operational shifts required.
It definitely can be. And this is precisely where we, at Aither Group, step in as your strategic partner. Our core mission is simple, really, to help you turn this complex compliance obligation into a seamless and, importantly, optimized part of your business operations.
So moving beyond just ticking the compliance box.
Absolutely. Our focus at Aither Group is to partner with you directly. First, to secure your compliance, that's foundational, but also to effectively manage your market risk and ultimately help you lead your sector through this inevitable transition. It's not just about avoiding penalties. It's about finding the strategic advantages in adapting early, investing smartly in decarbonization.
Building trust by showing both sides the challenges and the solutions.
That's the aim, offering balanced perspectives, practical ways forward, developing risk management and hedging strategies for those fuel suppliers facing price volatility,
Makes sense?
helping businesses map out their decarbonization pathways, identify smart investments in energy efficiency, or assisting logistics companies with planning that fleet transition and understanding the infrastructure landscape.
So tailored support depending on the stakeholder.
Precisely.
Okay, wrapping up then. It's clear the EU ETS2 is, well, it's a really significant development, reshaping markets, industries, even daily life.
It is. It's complex, definitely challenging in parts, but also packed with opportunities for those who are informed and prepared.
Understanding the why behind it all, thinking about those ripple effects and looking for solutions seems crucial.
Absolutely. It prompts a key question, really, for everyone listening. How might your own choices or your business strategy need to shift when carbon efficiency becomes such a central measure of value? Something to reflect on.
Indeed. Thank you for joining us on this Aither Insight.
Stay tuned for insights that matters.